is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White. And of course, what do we have today? We've got a market that is on expiration, and got a lot of interesting movement out here. I actually kind of distrusted a little bit the close yesterday and shorted the S&P, and about 10 points later, I didn't want anything that looked like a close over 1740 on the S&P cash as a continuation of what we've had. But certainly when we saw the volume yesterday come in at 3.6 or 3.5 billion shares on the consolidated New York Stock Exchange tape, there was every possibility that this could blow up all in our faces. Yeah, squeezable is the perfect word for today. But I was basically thinking that anything probably over 1740 is something that I didn't want to go any further. I shorted the S&Ps with the SDS, so I had basically about 10 points of S&P cash loss in my SDS. So, no big deal there. I had in the short department, I had one loser, one winner, one that was flat, and it is it's kind of been like that. I actually had a good intraday trading today, which is going to be my week out here. I've been covering a stock pretty much all week in the Tech Insider, setting up for today, and a hard one to invest in, but certainly an interesting one to play today, and that certainly saved my bacon for the week. But we'll see how that goes, and I'm waiting for it to probably pull back and get another shot at the apple as an investment. But good day to be day trading out here. A lot of nice action. Anyway, what else do we have going on? 1744 on the S&P cash. We've got 2.3 billion shares as we start the show. This is expiration day. Normally you have a little bit more volume on a Friday than other days. That we had such a light volume from probably about 11, maybe even 10:30 to 1 o'clock was kind of interesting. Volume has started to pick up. Again, this is going to be a big expiration. Yesterday I said I had been buying some of the out-of-money puts on the marketplace at 10, 20, 30 cents on some of these big stocks that are not going to pay off this week for me. But at this point, I thought that the downside risk was probably at least 50-50. And that they were so cheap, I just felt like if the ball bounced my way even a little, we'd do well. Not going to have those. Still have some out of the money Novembers, and we'll have to see how those start moving next week. But I'll be keeping an eye on those. For the market, of course, everybody's going to be talking about new highs going into this weekend in the S&P and the NASDAQ, because it is a party time, and nobody like CNBC likes to have like a chubby party. What is that song? There's no party like a chubby party. That horrible song from Chubby Checkers. There's no party like a chubby party. Yeah, maybe it was Chubby Checkers, I think. Anyway, they'll be really ringing the bell this weekend, I suspect. The question is, we've got about, for a high, we have just about the lowest in 15 years. What is it? The not contribution. The just being in the market. I'll think of the word I was thinking of in a minute. We have, for the retail investor, is the lowest participation. That's what I was thinking of. Lowest participation in a market in a long time. I had about 40 charts in the newsletter this morning, and it was there are a bumper crop of stocks where we're separating the wheat from the chaff right now. Both yesterday and today, fairly light volume. We're going to probably go through some of those here at the bottom of the hour, but we'll be looking at it. I'm going to be doing a little bit of the Tech Insider show during this show. We'll probably catch a few more things out here. Probably a few things that were very interesting. One is that Elon Musk has made a lot of hay out of his Tesla car. He went up against a company called Fisker Karma. Some people may remember that car a bit. And a big shot in Hong Kong has bought Fisker. It was going to claim bankruptcy in the next couple of weeks anyway. Not exactly sure why he didn't wait and just offer to buy it, but maybe he wanted it and all the employees together. They're made in Anaheim, California. But it looks like he may just be buying all the tooling and everything else and moving it to Hong Kong to go into the Chinese market with the Fisker Karma. Kind of a neat car. There's a couple of them around. Only about 2,700 ever made. But kind of neat. They've got solar panels on the roof. My guess is it'd take about a month to charge your car up if the sun was out 24 hours a day. But still interesting. But I digress. But that's what the show is all about. It's the I've won several digressing awards for this show, so we'll try to keep it. Anyway, 1743 on the S&P cash. That is above pretty much a line. We are getting a little continuation from yesterday, which is always a good sign. My guess is this thing's going to bounce a little bit and then come back down to 1730, and at that point we're either going to hold it or not. If we hold it, then I suspect what we do have in this market is leg, what do they call it? I'm thinking about Basel. But the fifth wave of an Elliott wave move, and that would be a very low, not fireworks, but it's normally leg five. The leg five of an Elliott wave chart would go back in and have a very smooth, very straightforward upward move that's just a little higher every day, a little higher every day, and very light volume as we go into some kind of major cataclysmic high. But everything that I can see out here does suggest that if we do pull back, get a nice test out here, we could have a 3 or 4 month run, and I would not be surprised to see, if we are in that fifth leg, to see something like 1,900 or 2,000 on the S&P. We could go we could go up, and it would seem almost insane. We're on the high end of valuations right now, but we could certainly, pretty much everything above 16 for a PE is monstrous. But I don't think that we'd have much trouble now, as much as people are chasing stocks, to see maybe PEs go up to 20 for an average on the S&P 500. I had a quick question about MELI. MELI. Let's take a quick look at it. Mercado Libre, which is, I think it's the distributor for liquor products, isn't it? Oh no, that's the. This is the kind of like a PayPal. It's a online commerce platform for buying, selling, and collecting. It is kind of like PayPal in South America. You certainly would like to see some kind of volume up here on the August 2nd high. you had 2.4 million shares. Tried it with 390,000 shares on October 4th, 270,000 shares so far today. I think you're probably going to come in well under that 2.4 and probably, match that October 4th high. But I don't know if it even matters now. From the discussions I can find online and in on the infotainment systems like Bloomberg and CNBC, it looks like everybody's just going to party until a taper happens, whenever that taper does happen. I'm hearing anything now from January of next year into next summer. If they let this thing go through next summer, I don't think we'll have any problem seeing S&P 1900 or even 2000. We are in a bubble, and the last stage of the bubbles are always incredible. The question is whether Bernanke has the intestinal fortitude to go and put an end to this bubble. My guess is that he doesn't care. He's out in January anyway. And he'll leave this mess for someone else to clean up. No reason to tarnish his record with doing whatever is right. But kind of interesting. I already completed the Tech Insider newsletter today. Again, there was a new stock out there that we had a huge move today. I've been talking about it pretty much all week. But we're going to wait for it to pull back. Anyway, let's see, what else do we have? Wanted to get into a couple of news articles I had. There we go. Okay, there's a few news articles I wanted to get to, but busy day, so I didn't have a lot of time to get to slides. Some of this stuff was a little earlier this week, but still bears looking at. Walmart expect its strong holiday season on record. Its strongest holiday season on record, with tablets representing 4 out of the top 5 items in layaway so far this year. I'm excited about the holiday season. I expect this to be one of the best years ever, Walmart U.S. Executive Vice President and Chief Marketing Officer Duncan McNaughton said at the company's annual meeting of investors and analysts. Getting kind of a tale of two cities out of Walmart. One day they're saying they're not doing that well. The next day they're saying they're doing very well. What I thought was interesting is that 3 out of the 5 items on their layaway plans were tablets. Pretty good indication of a tablet Christmas. I remember there was the DVD Christmas. There was the VCR Christmas in probably 85, 87, when the price dropped in half. Everybody started buying VCRs. But it is interesting. We're going to come back. We've got a few more news articles, and then at the bottom of the hour, we'll start looking at some more stocks.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we go through the day, let's take a quick look and see what the markets are doing. Pretty much stable here, up almost 11 points on the S&P cash, 2.4 billion shares on the consolidated New York Stock Exchange tape. And other things in the news out here. Mark Cuban, they're calling this Mark Cuban Unplugged. Of course, he's not a guy that actually needs a plug. He is Mr. Megaphone himself. But interesting post-mortem of his trial. Of course, he was acquitted of charges of being an insider trader. The whole question is whether or not, or why did the SEC chairman, Mary Jo White, continue to go after him. This case had been thrown out one time before. They came back on it. It cost him probably about the same amount as the fine would have been. He spent about $2 million in legal fees, he says. But this is one of these ones where you could pretty much tell they were going to lose, that the lawyers in the case probably need a slap on the wrist, at least on the U.S. government side. And the big thing is, interestingly enough, he's learned from the case, is that if you go up against the SEC, it's under no obligation to disclose evidence to you that might clear you. Apparently, in this case, there were a bunch of notes of the conversation that supposedly caused all this ruckus, and until they stumbled over something, couldn't force the government to actually produce these notes, and only found them months before the case actually went to trial. If they'd actually had these notes, maybe the government may have backed off earlier, and when they tried to force them into a deal. Very interesting issues in the case. Also was the CEO that supposedly had this conversation wouldn't show up in court. My guess is that when he told investigators that he was sure that whatever he told Mark Cuban wouldn't be used, or told everybody that he had that verbal agreement with Mark Cuban, that he was full of it. Nobody does that without having a signed document, and that he said that is probably self-serving, in that he wanted to make sure that he got his hands caught in the cookie jar, and didn't want to get him slapped. And because once you tell a lie, it's you have to kind of keep on telling it. And I think that's what happened in this case. The SEC really didn't like Mark Cuban for a variety of reasons, but one is that he has a network that's even farther left than Mao Zedong. And he's taking shots from the left-hand side of the current administration. I have a suspicion that they didn't like that any more than having talk radio take shots at him. And both of those people are feeling the wrath wherever you can get it to go after people that don't agree with the current administration. But kind of interesting, the whole way the whole thing came out. But he's got some nice things. A lot of guilty people going free. I have a feeling that this is one of the innocent people that was persecuted, and they could have brought a case against somebody else, probably far more deserving that they've let off in the past. But I think Mary Jo ran threw the dice hoping to get a big name like Mark Cuban, and who knows, maybe there was a lot of money passed around. Maybe someone else wanted his Dallas Mavericks, and thought maybe if he could get him convicted, maybe he could toss him out. I know a lot of the other owners don't like him too. So you never can tell. Anyway, other things in the news. The Supreme Court is accepting a challenge to the current administration's environmental policies. And that is and has been followed up. We're probably going to see something in the springtime. But a lot of the EPA's climate change prevention plans are rules and regulations that they gave themselves, that weren't given to them in any specific legislation or granted to them from the Congress. The question is whether or not they have those rights at all. And 6 petitions from the U.S. Chamber of Commerce and the state of Texas are going after them. So we may see some of the other issues following environmental issues settled at the Supreme Court. We'll talk about this a little bit more when we come back and get into some charts.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Had a good question in the Dan, and we'll go to charts, but this is probably a bigger trading theory, and that is, how do you go back and actually figure out whether an indicator works well or not? Sometimes they work counter to what you think they were, and that is not a straight correlation, but an inverse correlation. Now, the thought is that you just go out there and you test every single permutation of something out there. And the answer is that over time, almost always, you'll find that they pretty much zero out. Now, what you want to do is, if you really want to figure out how well something works, let's say a 50-day moving average. Do you do it just every day no matter what? And since it closed over a 50-day moving average, you give it a point or something, and what closes below a 50-day moving average continues to move lower than that 50-day moving average. You keep giving it points, subtracting points, kind of a totality of a move out there. My belief, and most that have put together any kind of trading system, only look at these big signals when there is a decent signal also in the sector or also in the broad markets. And the reason is that why these signals may be powerful, they are no match for the broad market. So if you're trying to get a signal and the way a signal moves, but you're in a huge downtrend, you get a bullish signal out there, probably the bullish signal is going to be swamped by the market. And certainly, same thing, you can find sectors that are just horrible moves. You may get good signals in those, but my model's always been that the broad indexes, the NASDAQ and the S&P 500, are probably about 50% of the correlation to a stock's movement. About 25% is the sector, and about 25% the stock. So if we're looking for individual butterflies or just Gartley 222s, if you're playing bullish butterflies and the market's headed down, how well do you think those going to work? Let's say that we could say a butterfly is worth 10% of that model. So we shorten everything up. That, or even 20% of that model, it's still not going to swamp the indexes out there. So you always go off a top-down approach, broad indexes, the sector, and then you look at the individual stocks and the maybe the signals in those stocks. On Wednesday night, Tom O'Brien and I did a webinar for the art of timing the trade charts. Certainly, if you've got that and you attended it, one of the things I tried to get in at the end of it was, oh, well, thank you, Spot. That was a little Spot announcement out here. But anyway, we've got one of the things you want to know is that just because you get good signals, almost no signal I know of. Hang on just a second here. I've got to find something to toss. Anyway, nothing's going to overwhelm a market or a market move as an index. I've tested them all, and even though you get, I love Gartley patterns. They are a percentage of the movement of the stock, and it may be even as high as a individual sector. So I may give it as much as 25% of the total trade when I weigh whether or not a trade works good. But at the same time, you really want to pick these when the movement of the market is with you. If you were in the webinar, Tom and I were talking a lot about the gold stocks. And there were a lot of Gartley patterns starting to show up about a week ago, maybe even a little longer. I think coming right out of that weekend, we started seeing some of them. And in those particular stocks, we found some that looked really good that were setting up, some with Gartley patterns. But those are one part of it. They are not all of it. And if you're going to figure out how well a signal works, you want to put it in context. Mechanically, I put it against a summation index. For those people that don't know what a summation index it is, you can look it up online. But basically, the advanced decline line on the S&P or on the New York Stock Exchange, there's about 2,700 stocks. And if a stock closes higher, they give it a 1 or add a 1. If it closes lower, they subtract a 1. And if it closes at the same price, they give it a 0. So you have about 2,700 stocks, and they just keep adding and subtracting. So it really depends on where you start on what the number is. So I'm not going to give you a big song and dance on how these numbers over on the right-hand side of the chart really mean a lot. But what you do want to look at is at the relative movement in these stocks. And what you do know is that over time, this is probably the best medium to long-term model for actually following where the actual stocks in the market, not just the indexes, move. And normally, when I'm looking for signals or trying to figure them out, I will take the peak points of these. Like this one over in May, we pretty much had the height of the advanced decline line. We found the lows somewhere around late June. So those are the dates that I'll say that a bearish signal should work better than a bullish one. When it starts moving back up in my model, I start looking for bullish signals and see how well they do within the context of it. Avoid the bearish butterfly and Gartley. So yeah, if we're in a bull market or the market is moving up, you want to be looking at bullish Gartleys, not bearish Gartleys. But just to give you an idea, normally I'll look, and one of the reasons why I had been somewhat bearish about this market is because the movement of the last 4 or 5 days with the summation index, it really wasn't adding up to any kind of real move into a signal until yesterday. We'll probably get another bounce today and we'll get it higher. But we've had a lower low in the summation index from that mid-June level and from the September low level, and we certainly could see those kind of levels yet again. So I'm not going long here. But if I do get a pullback on light volume and we get back down to just about 10 points, 15 points lower, I suspect we could put in a bottom in the summation index. This thing is starting to turn up. We could have a rally that lasts all the way through the end of the year, maybe even into the first hints of tapering, which will probably be next year. But that's my little dissertation. If you were actually going to try to make a trading system, you would not try to see how well bullish signals worked in a down market, and you wouldn't be trying to figure out how well bearish signals worked in a bull market. And I think that's the fallacy that people just say, how well did that signal work? It's really how well did that signal work in context to what it was telling you on the market. It may still be the strongest stock in a down market, but you may still make no money. Anyway, hopefully that answered your question. That's Pete D in the den. You can give me a call at 877-927-6648. But that would be interesting. Okay. So, I had a few other things. Anyway, the Supreme Court, when we last left, is going to be going through those environmental regulations. The EPA says that they've got a lot of power that has not been enumerated by any law. The question is whether or not the Supreme Court will let that stand. And this will be very significant, especially to the price of natural gas. We will probably not see these court cases resolved until, I suspect, probably March. So we're going to go through this winter. One of the things I did notice out here today was nat gas, and kind of interesting out here in 1932 on at least UNG. But the one thing that I did see was that cold weather is coming to the United States. So you probably want to be watching natural gas Monday, Tuesday, and Wednesday, and be looking forward to listening to Andy after my show on Tuesday, see what he thinks. But my guess, or at least what I heard in weather forecast, was that we were going to be having colder weather earlier in October than maybe normally a November cold spell. So we might see some decent movements in natural gas. So you will probably want to keep an eye on that. Trying to think what else is going on here. Yeah, hard to say. Okay. And let's get through some charts. A couple of these we're going to show were the ones that we showed Wednesday night. I just wanted to show you how well some of these work. And there is when we were talking about how well a sector is, the other thing I'd been noticing going into Wednesday night's webinar was that most of these housing companies and some of the other ones had actually looked like they were pretty much coming to a bottom. And even though we had a little bit bigger spike in Toll Brothers out here, this thing was going up and went below a previous low out here, which was the June 21st low that had 11 million shares. Yeah, I disliked that this thing had a little bit more volume in here. But again, this goes back to the totality of the sector. And we were seeing quite a few stocks out here. One of the other ones we brought up Wednesday night, it had a nice move off here. In fact, Tom and I were trying to get as many stocks that we thought would have good movements right off of Wednesday night's show, and this was another one. So Apollo Residential Mortgage. I saw a lot of these ETFs in the REIT area also bottoming, but this one was probably a fairly decent bet. And that was, you had 3 successive lows. They all came just under $14.40 for the first one with 1.9 million shares, $14.30 for the second one with 1.2 million shares, then 830,000 shares. And this is exactly what you like to see in a chart, and that is pretty much all the energy is all worn out. By the time it gets down to that third low. Sometimes you'll see these things move off the second low. And if you've listened to my show long enough, I'm really like stocks that have tested previous lows by 50%. So this was a very good low, tradable low on August 20th. But what I really like is the 1.9 million shares going to 830,000 shares, certainly less than 50%, and that's normally when you get a decent move that's going to stick in the marketplace. But certainly your odds go up dramatically off that. Let's see what else do we have out here. Wanted to see how this worked. EUO. We're looking at the EUO. It's another one that was a butterfly pattern that looked fairly decent, and we traded off a while ago. It's back in, and not a bad trade. It's just in this gap out here. Volume certainly isn't making me very excited. We're going against the last major low with 3.5 million shares on $17.56 back on February 1st. If we go back even a little bit longer in a time frame, we see that this gap actually started with 5 million shares, and that was on the 31st of October of 2011. This chart I really love. I have not bought the EUO. I know a lot of other people kind of hopped on it. I was hoping it would come back here and fill this gap a little bit more, and we certainly are getting that. But you're getting to the point now where you don't have much downside left in that gap. And if Monday and Tuesday we see a little bit of strength out of this thing, I think I might be hopping on this. But this, when we talk about all the energy coming out and previous highs on higher volume, certainly this chart has it for the ultra short. Hang on a second. I've got to get rid of some obnoxious message on my cell phone here, or it's going to continue making horrible little sounds at me. Anyway, when we get back at it, of course, we're talking about a gap, that gap with 5 million shares out here. Very high percentage chance that you're going to be able to buy this thing out here. But still no signal. You want to make sure that this thing does not break. And during the webinar, the other thing we talked about is how these stocks come off the bottom. You like to see some energy out of these things fairly quickly. One of the reasons I didn't hop on this thing was I didn't see a lot of energy off the bottom. So I didn't buy it. Not a bad trade. I just thought maybe there was some better out there. And of course, this was probably been better than the ones I picked, well, except a couple today. So. You live and you learn. We'll be back in a few minutes. Give me a call, 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we look at some movements out here, still that going to be light volume today, 2.6 billion shares on the consolidated tape. We just had 3.5 billion shares as we made new highs yesterday and broke those highs. Another nice move out here today. What we do want to be watching very closely are some of these stocks that have broken out. I've talked about it before, and there is a pattern called asymmetrical triangle. And that is higher highs and higher lows. And you really want to be watching those. One of the things someone called yesterday about Google and being short, I said I couldn't recommend it being long or short. Didn't see anything in the pattern. One thing you do know, though, is when these things base out like this and then break out one side to the other, you want to be watching these things very closely. They can fairly quickly come back and fill these gaps. But if they do come back and fill that gap, it is going to be one of the more bearish things that anybody's seen in a while in Google. When they go sideways like this one has since March of this year, maybe June, May, June, is that they build up steam to break out. But what you don't want to be seeing is the trading range continuing to narrow. And this isn't probably the best example. There are other ones out here. But if it goes about 3/4 through it's kind of the equal of putting a greater sign on this, but stretching it back to that June, July time frame. If it breaks out from that, what you normally get, the first move, is a head fake. And this would be one of the biggest ones I'd ever seen. If this thing starts bringing and coming back to the $900 level on a volume in the near future, you really want to be watching this. The other one that I keep on watching for, PC, what is it? Netflix, NFLX, is a something like Netflix. This thing's at 336 for a high today. I'd love for this thing. I think it's got earnings Tuesday or Wednesday. If this thing gaps one more time, like it has on the January gap, and then there was a April gap up. If you get a nice $30 gap up on this one, that's probably going to be it. And you normally come back in about a third of the time, or even maybe half the length of time. It'll come back and fill all three of those gaps. I've been watching this one for a while. This would be the gap up of all time, and of course Tuesday or Wednesday for that. But that's called a three-gap play. Normally they are very symmetrical. This one would be one of the biggest blow-off tops of all time. We'll have to be keeping an eye on it. But a lot of stuff going on out here. See if there's anything else we wanted to look at. There's a lot of stocks out here challenging highs. Charter Communications, one that's very interesting. This thing hit the August 2nd high at $137.29, 2.5 million shares. We got into it on the 16th with 560,000 shares, and we've came back today on a lighter volume out here. And let's see if we've got an earnings date for this. November 5th. So maybe a couple of weeks it hangs up out of here. But we've got a lot of stocks that don't have a lot of volume. That's why I'm not going long now. But we'd have to find a few. Hopefully we get a little pullback. Of course, Monday and Tuesday are going to be options rollovers. So I suspect we're going to have a very high volatility Monday and Tuesday. So anyway, see you all then. Same bat channel, same bat time. See you then.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest, at Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.